Okay, let's talk about the economy. Because if you're feeling a little bit of whiplash right now, you are definitely not alone. We are getting some of the most confusing, contradictory signals we've seen in a long time. It really feels like we're living in two totally different economic worlds at the exact same time. So let's just dive right in and try to make some sense of this paradox.
First up, look at this number, 32.5%. That's the share of young adults, we're talking 18 to 34, who are currently living with their parents. And get this, it's not going down, it's actually up from the previous year. And the big driver here, the absolutely crushing cost of housing. For a lot of people, financial independence just feels like it's getting further and further away. But then you see this. $144,400. That is the new average 401k balance. And according to a brand new report from Fidelity, that is an all-time high. I mean, think about it. Retirement accounts are surging. The number of people with over $1 million in their 401k is at a record, and people are consistently saving. It's a completely different picture.
So that's the big question, right? How can both of these things be happening at once? How can so many young people be struggling just to afford rent, while at the same time, retirement wealth is literally hitting record levels? It feels impossible. But the answer is, we're not actually looking at one single economy. What we're really living through is a period of intense economic divergence. It's like a split-screen story where different groups of people are having wildly different experiences. This is what a key-shaped recovery looks like in real time. Some people are on an upward path, soaring even, while others are on a downward path, falling further behind. And you know where you can really see this split in bright, flashing lights? The retail sector. It's always a great barometer for how the average person is feeling, and right now it's telling a very clear story about the haves and the have-nots. Just look at this. On one side, you've got a company like Gap, which just completely blew away expectations. They had this viral ad campaign, and it helped drive their best sales growth in years. Their CEO is out there saying customers are loving their value and style. But then, on the other side of the coin, you have Bath and Body Works. They just reported what they called disappointing results. They missed their targets, and their stock just cratered, plunging nearly 25% in a single day. The CEO basically admitted, our competitors have stepped up, we haven't. It's a perfect snapshot of this divergence. And the conflicting data just keeps on coming. I mean, you've got value-focused stores like Walmart absolutely crushing their earnings. At the same time, riskier assets are getting hammered. Bitcoin, for example, just tumbled to its lowest level in over 6 months. So it seems like investors are getting nervous and pulling back from risk, even while other parts of the market are popping champagne. So while the everyday consumer is trying to figure all this out, where is all the smart money going? Well, it's pouring into these massive, future-defining technological shifts that are basically creating whole new economic realities. And it all starts with AI. This is a huge reason for the split we're seeing. The incredible wealth being created here isn't exactly trickling down to everyone. Just look at the chipmaker Nvidia. They just posted another mind-blowing quarter, smashing expectations and giving a forecast so bullish, it sent a shockwave of confidence through the entire global stock market. Their CEO said demand for their latest AI chips is, and I'm quoting here, off the charts. This isn't just some hot trend, folks. It is a full-blown gold rush, and Nvidia is selling all the picks and shovels. Of course, this AI boom is happening so incredibly fast that governments are just scrambling to keep up. The White House is right now trying to draft an executive order to create a single federal standard for AI rules. They're trying to avoid what they call a patchwork, where all 50 states have their own different, confusing regulations. But as you can imagine, it's kicking off this massive debate about federal power versus states' rights. The stakes are just unbelievably high. And believe me, the intensity isn't just in AI. Let's pivot to another future tech, EVTOLs. Flying taxis. This quote is wild. It comes directly from a lawsuit filed by one of the industry leaders, Joby Aviation, against a huge rival, Archer. Joby is basically accusing Archer of using stolen files to snatch a major partnership deal. It's just a brutal reminder that in these new, high-stakes industries, the competition is absolutely ferocious. Now, this cutthroat competition isn't just happening between companies, it's happening between entire nations. All these technologies of the future, from the AI chips to the electric cars and the flying taxis, they all depend on a small handful of critical resources. And that has kicked off a brand new global scramble to control them. That's what one expert is calling the escalating race for the Arctic's massive untapped mineral wealth. As the climate changes and the ice melts, the region is becoming more accessible. And now, countries are jostling for position, desperate to find an alternative to China's current chokehold on the world supply of these strategic minerals.
So, what is everybody after? Well, we're talking about things like rare earth elements. You need those for electric motors and wind turbines. And we're talking about metals like gallium and germanium, which are absolutely essential for the high-end computer chips that power everything from our phones to our military tech. And right now, China is the world's #1 producer, which gives them immense geopolitical power. But here's another twist in our tale of two economies. Even as one side is racing towards the minerals of the future, another is doubling down hard on the energy of the past. The Trump administration just unveiled a plan for a huge expansion of offshore oil drilling, proposing 34 new lease sales right off the coast of Alaska and California. So you've got this incredible split. One part of the economy investing in a brand new energy future, and another trying to lock down the old one. The implications for jobs, for prices, and for the planet are, well, enormous.
Okay, so here's the bottom line. All of these massive global forces, the AI boom, the scramble for new resources, the huge shifts in energy policy, these are not just abstract headlines. They are directly shaping the economy that you live in, the job market you have to navigate, and the long-term security of your own finances.
So with all that noise, let's bring it back home with something really practical. How do you know if you're on the right track? Well, financial experts often point to these general benchmarks as a good guide. The idea is to have saved about 1 times your annual salary by the time you're 30, 3 times by age 40, and so on, all the way up to 10 times your income by the time you're 67. It's just a clear, simple way to measure your own progress in the middle of all this chaos.
And that really brings us to the final, most important question. We're living in this economy of contradictions. We've got real struggle and record wealth. We have futuristic tech and old school resources. We have incredible opportunity right alongside profound uncertainty. Knowing all of that, the only question that really matters is the one you have to ask yourself. In this tale of two economies, what's your next move?